How's it going, everyone? Welcome to the weekly trading review for the week of 11/3. This week, I had 19 total trades, 10 wins, 8 losses, and 1 scratch. Total profits was a net loss of $1,024.50. On my swing trades, I had 4 wins and 5 losses, total net loss of negative 937.50. Day trades, 5 wins, 2 losses, and 1 scratch at a loss of negative $39. Spy Super System, or I guess my other category, 1 win, 1 loss, and negative $48 profit. So red week this week, and that was mainly because of a swing trade gone wrong earlier in UAMY, and then a loss that we had in the Microsoft PCS that I had legged out of. So I'll go over those trades in detail in a second. Let's start with just the market this week. We'll take a look at what happened here. So on this right here, you'll see the SPY daily chart. And in addition to the SMAs and the 815 EMAs, I've just put in the AVWAP from 1010, as well as the all-time high AVWAP, watching some of those levels here. And we had broken through this upward sloping trend line here on SPY. If I draw this back dating to about here, you can see that we have poked through it a couple times, but we're kind of starting to break out of the channel. So I removed that to the downside. So SPY this week, another bearish week to start off on the 4th. We had a gap down, a test, another test. We tried to actually rally up here through this all-time high VWAP, and this looked like a pretty decent day. But then we got some more heavy selling pressure, and we broke through with a decent bearish trend day on the 6th. We started out with a very bearish trend day on the 7th here as you cracked down through the 50 and got all the way down to about 660 before the market then rallied up off the 50, forming this nice this nice bullish hammer on heavy volume, closing above the 50, filling in this gap, and being green on the day. So we've had a deeper pullback, and that makes sense given that one, we have some really choppy action after this 10-10 candle, lot of selling pressure going on here. And then we broke up to the all-time high and a couple of gap and goes, right? We got a gap up, hold, gap up and go, gap up, hold, gap up, kind of hold here. So we got a couple of gaps, and then we started to give away those gains. And we're looking originally, when I took some swing trades on the 5th, I was looking to see some support hold at the 674 level. You can see that this has become horizontal resistance, and then it became support. We tested this here and we tried to poke back above it, but then we fell down back below that level, which then kept the SMA 50 as a key level. So that's where the market is right now. In terms of my bias, still long term, the market is bullish, right? We're still holding these SMAs. We're getting some more frequent tests of the 50 here. You can see that when we had this first initial rally, we got tests of we didn't spend a lot of time below the 15 here, and we kind of held this pretty well. Got some deeper dips here as we started to churn up higher, and then we started to spend excuse me, started to spend more time below this 8 and 15 EMA, more choppy action here, and you see the price action has just become really pretty garbage in the last month or so. Some very difficult trading conditions, in my opinion. So this is a nice deeper dip to the 50, and this is what we might need for a nice little year-end rally. And what I'm looking for this week is something like this, where we get some sort of dip, and then right we push up higher, and then make a new all-time high. Same thing that kind of happened here. We got this dip, and then we got this gap up and go, and then we kind of never really revisited this low. So that's really what I want to see on Monday here, that we get some follow through and we start to close above the 815 EMAs as well as this all-time high AVWAB, which it all should come into play around, I'd say 675 ish, 676. So if the market can add to those gains here, that's going to be a really nice entry for swing longs. And you can take some starter positions here on the 7th, knowing that you might be a little bit early in the market here, and you have to be leaning on support on the 50 SMA and this tail over here. So with that, let's get into the swing trades for this week. Okay, so 9 swing trades, and we're going to start this with our starting with our open timestamp date here. So the first one was UAMY. This was one taken in the right line trading room. So originally the trade was taken here as the stock had come back up. It made this pretty big rally up here. This is a minerals, rare earth kind of play. Poked back above the 8 and the 15. Was looking pretty decent, but in my opinion, it hadn't cleared this all-time high VWAP. So it wasn't probably my first go-to pick. I would have liked to see some better follow-through on this guy. Um, so we got here, and then it kind of compressed. Then we got a gap down on the news on I think some better negotiations with the China tariffs, which brought the value of the stock down. And then it was pretty much just a dead deal here as the stock turned around and did nothing. So I got in the stock 2 contracts at $2.95 each, and then I got out on the 6th for 5 cents. So basically, took a 98% loss on that, or a $2.90 loss per contract overall. Just because I was like, I'll take the nickel. This is going to expire worthless anyways, and it's probably not going to do much. So take the loss on that, and that was one of the max losses we had on UAMY. And this was just something that, look, it broke through the 8 and 15, and we're waiting on some news to come out to pop this back up. And then if it doesn't come out, we took it knowing that if we take the max loss, we'll be okay. So that's what happened in UAMY. Microsoft, this was a PCS that was taken on the 30th over here. So stock had pulled back from earnings to the 8 and the 15, was still red on the day, so a bit of a falling knife. A bit of a falling knife type play. So took it initially, took the 510-505 PCS expiring on the 21st for $1.05 credit. Added on that day at 125, so now we had a double position at $1.15. And then this stock, it pretty much started to pull back here. Here's it hit the prior AVWAP, came back down, broke through this upward sloping trend line, and it was testing this SMA 150. So 4 was a critical day. This was a nice little bounce, but it was pretty bearish, all things considered, in the market. And we wanted to see that this stock would rally here after the 4th. And then when we got this bearish move here on the 5th, that is not a good sign, right? The market was actually pushing up that day, and Microsoft was rejecting off the 50 and selling down. So that is a warning sign in the stock, and it was breaking through technical support. So on the 6th, I'm going to go to that day here, and we can just take a look at Microsoft. So on the 6th, we did 2 things here. First thing was take a partial loss. So I closed half the position for a loss at 285. So got it, average cost of 115, got out at 285. So that's a $1.70 loss on the first half per contract. That was 3 contracts on that side. Then waited to this guy, and then once it started to bounce over here, that's when I legged out of the position. Or I legged out over here, and then I took profits on the leg out over here. And then that's on that second leg, I only took a 20-cent loss overall versus a $1.70 loss. So that ended up being a pretty nice trade. So that was 20-cent loss on 3 contracts, which was a 60-cent loss overall. So adding these 2 up, the total loss on this was a $2 loss on a 2x size, which is pretty good considering the max loss I could have gotten on this Microsoft spread would have been a $3.85 loss per contract times 6. So it would have been like probably 3x higher. So that was a nice win. Or I guess not a nice win. It was a loss, and definitely the big loss this week, but we played it well. The stock broke down through support, so we had these ingredients necessary to leg out, and so we did so. So that was Microsoft. I think the legging out can be tricky, but it clearly had broken through some support levels, taking it early in the day, and the market was weak as well as it was breaking through some of these support levels. So Um, that was Microsoft. Next trade that we took as a win for the week, our biggest win, was Lumen. So took this trade. This was also called out in the Right Line trading chat room on the 3rd. And here is the price action on the 3rd. So look, bullish stock, had kind of gotten a little bit too ahead of itself here, had earnings, pulled back, got a gap down, and then recovered all those gains on the earnings. And then next days continued to move up higher um, with some follow through buying. And it still looks pretty bullish right now, just digesting some of the gains. And it's really holding up pretty well. You see the market has been selling off hard, and this stock has been holding pretty well. So when the market starts to rally, then we can probably get out of this stock as well. So uh, took this stock, took the November 21st $9 calls for $2.25. Just gonna double check this price. Yep. And took 4 contracts of that. And this stock had rallied. It hit some resistance here at this 1133 level. This thicker green line is a 10-day high. So that lets me see usually like when a stock is approaching some recent high, which it is over here. So it hit that level. We're kind of rejected off that day, and then it still managed to find some support. The market was selling off here on the 3rd. So it was selling off, found some support, and then grinded up higher, and then finished with a nice late day flush. So we had an order out for 290. We took profits at 280. So took some nice profits here. So I took profits at 280 on 3 out of the 4 contracts, and I left a runner up because this was some strong price action. And I saw there was a lot of OI at around 12, so I figured that I could probably ride this up until 12 and then take some gains. So when it started to get really, really high over here later in the day, I took that last contract off at 305. So basically total profits, average profits on the exit was about 286 or about 51 cents per contract. So really nice win on Lumen, one of the highlights this week for sure. And it was just a good setup, right? If you look at this chart, strong D1 chart, you're not getting a stock that was too extended for the day. You get it over here, and you can ride this D1 chart and take it higher. All right. Next trade here is Google. So Google, this trade was taken on the 6th, right here. Another one called out in the right line trading room. Again, very strong stock, pretty organized price action, and was holding the earnings gap up over here. And you can see that on the 5th over here, right? Market had a big, nice tail. Google didn't actually tail too hard over here. So this stock on Google, let's just take a look here. Yep, there's on the 3rd. Pulling back to the 8 over here, and it's kind of bouncing off the 8, right? It's sort of digesting gains, not getting too extended. And then this day was nice because it got back above that AVWAP E, holding that level. You might have found some resistance. You can see here at the midpoint of this candle. That was providing a bit of a line in the sand here for Google. You can see around pretty much about 285, 286 ish was providing some support or some resistance. Sorry, on that stock. So I'd taken Google right here at 283, and it had room to probably about like 290 or so. So it had some nice room in there. Took the November 14th calls, got in for $9.80 right over here. Google kind of chopping around. Had this really big pop up on news and then kind of squashed back in. But I had an order out for $13. And then Google popped up over here, got really close to my order. I think it hit like 1280 or 1285. So a lot of people got filled at 1280. I was trying to push it a little bit more, but I didn't get filled on this candle. And then the market on 11.6 was starting to sell off here. So let's take a look at the market at that time. Yep. So you can see that market selling off over here, hitting that level, and then Google is, let me push this over here a little bit. Right, you can see Google pushing up higher, got really close here, but market's dragging it back down, so it's looking pretty good. And then when I got this candle over here, I got out of the trade at $9.95. So even though I was up pretty high, I was up pretty much $3 on the trade. Came down really hard. Stock has a lot of movement because expensive stock can make big moves. So took a small win on this, just a $15 win on Google, which is unfortunate, but hey, sometimes you're going to get close. It'll just miss your price target and then pull back. So that's part of trading, and just have to move on to the next trade. Okay, I am going to talk about three short-term swings I took here. So first was CN, and I'm going to go to the SPY D1 chart here first. So okay, so on this day, you can see how the market had started to hit some support over here and had a nice bounce off support for most of the day before pulling back in. So off this bounce of support, I liked how it was getting above the 8 and the 15. I liked how it was holding that level and getting above the prior day high. And so I thought this was a nice entry point for some swings. I took a starter position in CN. I took it at 196 over here, close to the end of the day. And then I also took a starter position on MU. All right, I took it right here. I took it at 239 on MU. Both were 25 shares. And then I took a swing long on SPY. I took a 685, 690 out of the money CDS expiring on November 28th. Given the fact that, all right, I mean, SPY could probably rally over here and start to get through. It probably challenged the all-time high, which is around 690. And I gave myself about a month, or I think about a month on that position. So those are the three swings I took off this candle. Now let's look at the M5 chart and see what happened on that day and why I decided to exit those positions. So right, here's the day. It's looking pretty good. It's kind of compressing here, but I wasn't super worried about this compression because it had made a pretty nice move. So I liked the fact that it was holding the gains, it was digesting the gains, and it was holding above this prior day high right around 680. So I like that a lot. And then we kind of got this late day selling pressure. We got this little dip here at 230 or so, but it still wasn't like super bad, right? Like this isn't anything crazy. So I was fine with the swings that I was in. But then we got some pretty decent follow through selling to close the day. And then honestly, these last 15 candles, this last three candles, the characteristic of the chart changed very dramatically. And usually you're good in the last, 15, 30 minutes, 15 minutes. Like you're usually good for the most part on a day like that. But because it ended like that, that had me on alert on my swings because I wanted the market to close above those levels and it didn't. So once I saw this, I said, okay, well, the next day, one, we have to support this level. So this probably means we're going to be retesting this level. And I want to see a higher low and I want to see a really strong bounce that gets it back above this high tomorrow, right? So we get a small gap down and we're testing this level. And then we actually start to break through here. And then when we start to break through, this is when I exit my swing long. So on MU, I get in at 239. I get out at 237.30 for a $1.70 loss. On CN, I get in right at 196. I get out at 199.96. So it's a $3.96 win per share. So both of those trades end up netting out, and I take a small win on that. On the SPY trade, I do take a loss, so I get in on my out of the money CDS on SPY. Got in at about 225 per spread, and then I got out at 185. So that was about a 40-cent loss. I think where was it 180? Yeah, got around 180. So it took about a 50-cent loss per share on that. So just some small losses overall, nothing too much on this, and the profit potential for these were really big, right? So It's a relatively small loss relative to what I could have made had I been right in this instance. But I was fine because I was like, hey, look, well, I'm leading on the support at 674. So if we crack through it hard with some heavy volume, right, I am on watch alert, right? Because this is not what I expected. I expected us to bounce off, and we sold off hard yesterday. We have some fall through selling here, and we're still making new lows on the D1 chart. We're still below the 8 and 50 EMAs. We're not above that all time high of VWAP. So technically speaking, the market's still bearish, and I'm not trying to load up the boat on swings when the market's still bearish. It's not ready yet. So because I was a little early, I have to take the small loss and reevaluate the position on the sidelines. So those were those three positions. And then to wrap up these final three here, two of them were earnings time spreads. So let's look at one here. This is LCID. This is one that I called out in the Right Line Trading Room that the folks took. And I'm just going to pull up the stats here on the side. Okay, so took the 1650 calls at about 21 cents, took 25 contracts of that. The setup for LCID, first, we have really good liquidity, which is typically what you want. I mean, you can get away with anything above -4 option liquidity on Option Stalker Pro. But typically, I like to see stocks that are above 2, above 4. In this case, the OL was 6. So that was really nice. It exceeded earnings only about 6.67% of the time, which is low. We want that below 20%. And then the IV crush between this week's IV and next week's, or next week's, yeah, this week's IV to next week's IV was about 41 to 42%, which is above our threshold. So met all the criteria. So we got in at about 11:45 on that day. We had an order out for about 27 cents to see if we could get filled on the same day. I got pretty close. It got to like 25, 26, but we didn't get a fill. So was just waiting to see what would happen on earnings. Earnings was relatively flat. It popped up a little bit, but nothing really spectacular here. So on the open, I actually raised my price target before on the open to 28 cents because it didn't move around too much. And then it got filled in the first couple of minutes. Let me see here, 11.6. Let me go to this candle. Yep, so here's the gap up. You see a bunch of volatility on 11.6 here. Here's the earnings. Here's the day we took it on 11.5. A lot of volatility on 11.6. Didn't really go anywhere. So we got filled in this opening candle. I got out at 28 cents or a 7-cent gain overall per contract, which is a 33% gain. So that was a nice win in LCID. And these time spreads are nice, and these conditions where SPY is just choppy, not really doing too much, just kind of being flat, kind of being boring. It's you can't really get aggressively long. You don't want to get super short. So finding a good time spread on a day is a nice way to generate some income. Okay, other time spread that we had taken. Well, actually, this is an open position, so I will leave that actually towards the end. So next one I took here, I took a straddle on MOS. So here's the criteria for the straddle, and this is something that I'm practicing in. So took the 25 straddle here at the end of day on the 6th. So I took it kind of around here. Took the 25 straddle for, let's find this. Took it for 65 cents and it took 5 contracts. And that was a really nice price for the straddle. You can see that the stock, the ATR over here is around $1-ish or so. It's kind of dropped a little bit here, but about $1. So I'm getting really good value for that move on MOS. It had some lot of volatility into earnings over here. Big candles, high ATR, lots of volume, and it had made a pretty big move. So I figured that this stock could probably snap back over here as it approached maybe the VWAP, maybe got to the midpoint of this candle or something. So it could either snap back or it could get a really big drop lower given that move. So I was looking for on Friday maybe like a 20-cent gain, 15 to 20 cents, so anywhere from like 20%, 20 to 25% return, 30% maybe, depending on what I can get. So on the Friday, we got market had a gap and go down. Let me go on Friday here. So we got this gap and go down in the first half of the day. And this stock was just flat. It wasn't really doing anything. And because I had time decay working against me, since this spread was expiring on the same day, I got out at 12.45 for 32 cents. So it took about a 50% loss on the position, 33 cents loss. Just because it was flat and it wasn't really moving. I needed to see some movement either way in the stock, and didn't really do much over here. Now, it didn't make a move finally end of day over here based on this rally. Um, so, I mean, one thing I could have done is when I saw this rally, I could have maybe legged out of my puts and ridden the calls up for some sort of profit. That's one way to play strangles. You can leg out when you hit 100% on one leg, um, and then see, and then kind of just ride up the other leg as so. But that meant actually predicting a bullish reversal day, which we just didn't have the prediction. We didn't have any evidence for that yet. It had to happen probably somewhere over here. You could start to get pretty favorable on the long side. The last 2 hours of the day, you can get a nice PM move. But outside of that, I mean, this is garbage price action, and you'd usually expect this to just stay garbage for most of the day, as the stock is most likely just digesting the gains from the big move instead of having some snapback or overreaction the other one way or the other. So those are the swings this week, and again, overall, I think a lot of these I wasn't mad about the setups here. I thought they were good setups. Either they just didn't pan out, or the market wasn't quite ready for these setups. So let's go into the day trades this week. And I had 8 day trades this week. And I've been, after my 1 share challenge, I'm now doing one contract or 1 or 2 contracts, trading about a $300, max risk or so. So anywhere from 1 to 4 contracts, depending on how much they're worth, but trying to target 300-ish, $400 of risk per contract. So let's start this in order, starting with LVS. So LVS, super strong stock, and my criteria for day trades is typically I try to get a really strong, pretty good stock on the D1 that's trending directionally in my favor. And then intraday chart, I want to see a lot of organized buying here, just a lot of steady price action, a lot of control, not a lot of just kind of jank or junk in the way over here, right? So I don't want to trade any sort of choppy price action like this that I'm seeing, like you see on the fourth here in LVS. I want to trade, right? I want to trade this price action where it's a lot of consecutive green candles, many, many green candles, and they're just riding this 8 and 15 EMA all the way up. So LVS here, if I go back on SPY on this day, and I think I'm probably, here's the setup on LVS. I'm going to pull up, I'm going to pull up this chart actually. It might be a little bit easier to see. Okay. And let's go to 11.3. All right. So here's SPY on 11.3. You can see how the market pulled back down here. And then LVS, it did get pulled down, but it held this gap up. It pretty much held its low of the day over here, and then it rallied back above VWAP before SPY did. So here's a pretty decent entry point, I would say, for LVS. Had relative strength. It had bullish momentum over here. And you could ride this guy up for a good chunk of time. So I caught it a little bit later because at this point, when LVS was setting up quite well, SPY was right on the VWAP. It's kind of hard to see if this would roll over again. We had some selling pressure, but the market did manage to climb and put in some sort of little rally over here. So when LVS broke above this high of the day over here at 61, that's kind of when it went long. So it went long right at here on this 1250 candle. I took the weekly calls, the 11.7 $60 calls for $1.68. Took 2 contracts of that, And I was targeting about 20, at least target about 20% on my calls intraday. So just watching the price action. So I have a target out for 20%. And then stock just kind of pulls back here, looks fine, rallies back up, and then it's just kind of stalling here for a little while, right? While the market's leaking lower. And I was like, all right, I mean, I've taken some decent gains here. So if I can't break this compression, I'm going to get out because this made a pretty nice move. So waiting for it doesn't really do anything. So I get out of the trade at $1.83, which is a 15-cent gain or about a 9% gain. So take a decent little win in LVS. And right after I got out, we got this big red candle here that was not great, but then it got gobbled up quite quickly, and the stock finished quite strongly for the day. So that was a nice little win in LVS, and yeah, I mean it was pretty janky day if you look at the market over here. If I zoom out a little bit, right? I mean, this is some garbage price action. This is some tough trading conditions. So I'm just picking a really strong stock, getting a nice little chunk out of it, and then going in for waiting for the next day here. All right, day trade number 2 was NCLH. So let's look at this first on the D1 chart, see what we're working with. This was a post-earn bear, very weak post earnings, a lot of volume, a lot of ATR, big move lower. So this was a really nice one. So on NCLH, let's look at this chart here. So SPY, it's kind of pulled back here, rallied up into this gap on the 4th. And this was a pretty nice move before it started to stall, and then it started to get lower and get kind of weak. So this was called out in the room, and I took NCLH right over here, 1103, as the stock had made here, and it kind of pulled back to the 8 EMA. And I took the 11.7 $20 calls, which were right here. So I took the 11.7 $20 calls expiring this week for 95 cents. I took 4 of those. And the stock was kind of pulling, and then we got a nice pop down lower over here, and then I had an order out on this guy for $1 or for about a 20-cent gain, so 21-cent profit. So that got hit right on this candle at 11.45. So got filled on this candle, and that was just a nice win. Took 20% on those puts. So that was NCLH. Only trade I took that day. It did end up going on a little bit further, you can see. So there's maybe another chance to get in on the trade over here. But I was happy with the profits. Again, it's hard to say what SPY is going to do for the day. Right over here, it's still testing VWAP, so it could have bounced off VWAP. It could have gone lower. Just not very high probability trading environment. So what we're doing is we're mitigating that with very strong price action on the stock that's going to ignore the market for the most part, that have heavy volume, right? And there's usually a catalyst here. There's a post-early catalyst that the stock is just, it does not care what the market's doing at all, right? Market has a little bit of gravity here. It's just stalling, leaking lower. That's the stock that you want to get in, and just get in off these 8 EMA pullbacks. So over here, right, I'm not chasing it over here at like $1.08. I'm waiting for it to pull back over here to the 8 EMA. You probably could have even got it for like 90 cents if you wanted to. 90 cents, 95 cents. Getting it at a pullback and then getting it on the next drop. So nice win in NCLH. On the 5th, I had taken Tesla. So let's look at Tesla here on the 5th. So stock had rallied up here. It had a pretty nice trend. This is a decently little bullish day in the market here that eventually turned to mush. But Tesla had a really nice grindy trend for the most part and was grinding up even though the market was already kind of flat. So you can see it held up over here. So here's a nice entry point on Tesla that I missed at 220. Stock did push up higher. So I got in on Tesla, you could have taken calls, but they're really expensive. So I took a debit spread here. I took the 465, 467.50 call debit spread for $1.15. and I was targeting maybe like 20 cents on this if I could. Stock popped up over here, it was $1.25. I wanted to see it, and it was still pretty bullish. So I figured, okay, I mean, if it pops up, I needed to get to like 467.50, which is maybe one more candle of move here before I can take profits. Popped up, kind of held back over here, stalled, and then over here, instead of it being able to push back higher, you can see how on Tesla there was like this tail, there was this wick over here, right? That it popped back up, and then sellers started to smack it down. So when I saw that, I scratched out of the trade at $1.15 on that debit spread, and that was that. So scratched out of that trade on that day. Didn't really do too much. Okay, November 6th, a lot of trades, a lot of activity on November 6th. Let's start with Microsoft. Okay, so Microsoft had a couple nice ones here. So had a really nice VWAP projection right here. So this is a really nice entry in Microsoft at 10:30, which I missed, but that's one you certainly could have taken, and that was a nice $5 right there. Beautiful gain here early in the day. That's a textbook VWAP entry right there. Um, Strong move lower, weak move higher, and then hits VWAP, rolls over, and then boom, we get that next leg lower and starts to sell. So I got into Microsoft here. This was called out again, the Right Line Trading chat room. Got the 500 puts November 7th for $4.90. And market, you see, was pretty bearish. Stock was just kind of chopping around here, not really doing too much. So I got out of the trade somewhere around here. As the stock market was sinking lower, stock was losing its relative strength, and then it didn't really actually sell off too much here with the market. So took this trade, like I said, on the 1050 candle, which was here. Got out of the trade at the 1240 candle, which was just about here, right? This is dead, gaining relative strength, not really doing a whole lot. Market's starting to bounce, so got out of that trade and got out at $4.25. So that was a 65-cent loss, or a 13% loss in Microsoft. But the other trade I took was KMX, and KMX was a really nice bearish chart. So I'll quickly show Microsoft. I forgot to show that guy, even though we'd seen it in the PCS. So right, this is actually the same day we legged out of the PCS. We got back in on a day trade, and yeah, I mean, bearish chart, right? We have technical breakdown, heavy volume, a lot of momentum in the stock. So this is a really nice bearish chart for a day trade. We just have to get a good entry on this intraday. KMX, similar setup to NCLH, where there was a really big bearish move post earns, a lot of volume, lot of momentum, huge, massive ATR on KMX. So here's KMX, kind of gap down here. We're just compressing for a bit, and then it started to sell off. So got into KMX at 1120, and I took they only had monthlies, so I took the November 21st 35 puts for $2.25, which is pretty good, right? That's I'm paying about, there's $1.30 of intrinsic, so there's about, there's some IV there, but that was pretty decent. I took just one contract of that. Stock just immediately grinded lower, then just hugged the 8 EMA, and then pushed a little bit lower over here. And I believe I got out of this trade kind of right around here. I was bidding for 75 cents because this price action was super strong. But at this point in time, you can see how the market was starting to find some support here at this level. And I made a pretty nice gain on KMX. So got out of this trade at 310, took it for a 24% profit, 60-cent gain. So that's a really nice trade. That canceled out the loss on my Microsoft day trade that I took. But got some good stuff. Some good stuff in KMX. Next one I took same day here was Kava. So I took Kava pretty much right here. So you can see that this SPY was coming up. There was actually a bearish 1OP cross here, and then it started to roll over. We got this red candle right here. So as soon as I got this candle here on SPY, that's when I took the trade. So I went short Kava. Um, yeah, went short Kava. Yeah, pretty much right around there actually. Um, and I took the 11th November 7th 50 puts for $3, right? And you can see I'm getting a lot of intrinsic over here on Kava. It's about maybe about 10-15 cents of intrinsic over here. Here's this D1 chart on Kava. Again, just really bearish D1 chart, right? This stock is just getting absolutely hammered, selling off real hard today. So that's what I wanted to see on the stock. And those are the stocks I like to trade in. You can see this price action. I think KMX is obviously a little bit nicer, but I mean Kava is a pretty nice D1 grinder, just totally ignoring the market, just steady, 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 steady selling the whole day that you can ride, then eventually get out later in the day. So it's a really nice stuff here in Kava. Um, yeah, so I took this guy pretty much right around. Yes, right around here. We broke through here, got on a little pop back up. So got in at $3. And then I wanted to see SPY on this bearish cycle break through the low of the day and push back a little bit deeper here in the market. Or push back a little bit deeper and make a nice new leg lower. Um, didn't get that. We got this leg lower and then started to stall over here. And we started to cross back up over here at 320. So didn't like that in SPY. I wanted to see this get smacked down here, but Kava was not looking too great. So eventually I ended up getting out of the trade here at 11:24 or at 1:24. Yeah, I got out kind of right around here. And it's a bit hard to tell on Kava. Um, oh yes, I'm sorry. Actually, I got it over here on Kava. So I was paying about 40 cents of intrinsic, let's call it. Got it at $3 or 280, sorry. 280, so not, yeah, pretty much almost all parity or almost all intrinsic here. Popped down lower, kind of compressed to nothing, and because the market was starting to rally, it didn't. My thesis was out, so I got out of the trade. Took 20 cents on that, or just a 7-cent win, 7% win on Kava. But that still nice little win, and I got out of the way of the market, and stock kind of pretty much flattened out for the rest of the day as most of that move had been realized. So that was Kava. And let's finish up with the day trades on Friday. First one is KO. In KO, this one pissed me off, which I'll explain in a little bit. KO on the D1 chart, it was breaking out, but this is a divergent ticker. So KO is pushing up because SPY is selling off quite hard. That's why it had a gap and go up, but had a pretty nice little D1 breakout. So called out in the right line room, and I was trading that call out. So took this stock kind of around here, which was 11:55, right? As it's bouncing off that 8 EMA here. Got filled on this pullback. And I took the 11/7/70 calls for 80 cents. It got filled here. As the stock broke through this 8 EMA, I meant to get out of the trade for 70 cents. Instead, I added to the trade at 70 cents, and I didn't realize I added to the trade until later, where I got out of the trade around over here, which was 112 after it had pulled back to VWAP. So pretty pissed about KO because this should have been a small, tiny little loss. Ended up being a bigger loss. So I averaged down at 70 cents. So I instead of 4 contracts in the initial position at 70 cents, at 80 cents each, I had 8 contracts at 75 cents. And I got out of those 8 contracts at 49 cents. So took a 26-cent loss, or yeah, about a 35% loss on a double position. So was just kind of pissed about that because it felt like those fat finger mistakes is something that I really don't want to do. And I think part of the reason was that just in the Tradier platform, Um, Sometimes it's easy to, like, when you went to, when sometimes you got to close a trade, or if it's, especially if it's a multi-leg trade, you can put in, like, this is obviously a single leg, so it's a little bit easier. But if you're doing something like a credit or a debit, you have to make sure you put the opposite um, value here. So if you get put up PCS for a credit and you meant to close the trade, trader won't automatically count the trade for a debit to close the trade. So you have to put in the right amount. There's a couple times where I've been screwed like that, where I put in like a credit and this really should be a debit, and then I end up getting out at like a terrible price on the trade. So on this one here, I think solution is for me to avoid the fat fingering, just sticking with the one option platform here. Because once you have the position, you can easily click the ask and sell at the ask, or sell the position using that platform, and it's just a lot easier. Um, because it shows you the platform kind of visually what you have. So I'm probably going to stick with that in the future, just to avoid some of the fat fingers in Tradier, because it's can be a little bit tricky sometimes, and I just don't want. I really don't like these kind of mistakes, because it just had nothing to do with me and my actual trading thesis. I traded it exactly how I should have, but I just executed the wrong order. But again, it's going to happen. It's part of trading. You're going to have some fat finger blunders here, but just want to have a good process to make that as minimal as possible. So let's finish off the day trades here with my last one for the week, which was Adobe. So Adobe, again, bearish stock, pretty choppy stock, so it's not really one that I would trade, to be honest. I mean, look at this, is some garbage price action, just absolute garbage price action on Adobe. But it had broken through this downward sloping trend line here, some of this horizontal support. So was interested in that stock. So you can see that it had this pop up higher, then it sold off pretty steadily for most of the day. And while SPY was rallying, Adobe was starting to sell off over here. So I got in Adobe at the 1234 candle. So I got kind of over here. Stock was getting close to the 8 EMA, putting in some wicks that I could lean on. And I wanted to see this stock SPY start to roll over, and this stock start to leak lower. So took the 325 puts on November 7th. So basically, I guess there were not exactly lottos because they weren't out of the money, but essentially 0 DT in the money puts. Took them at 180. Took two contracts at 1234. Market start to push in lower, then start to pop in higher, which I wasn't a fan of in Adobe. And I just had an order out on this guy for 225, and it got real close. You see, we got this hammer poked through lower here, got to 220, and then we snapped back over here. And as soon as I saw the snapback hammer, I was like, this is over. Market's rallying. Adobe cannot push through more, and this stock is going to start to push up higher. So got out of this trade at $2. So it took 20 cents on that, or 11% gain on the position. So still a nice little win to close out the week. But overall, I think the day trading wasn't pretty good. I've been really trying to focus in these LPT conditions on stocks that have very strong intraday trends, room on the D1 chart, and just getting good entries off either VWAP or the 8 EMA, and using those as support. So those are the setups that I've been taking mainly. And yeah, just those stocks that are really just ignoring the market. They have the volume, they have the organization, and the strong price action that you can lean on. Even if you get some adverse moves in the market, those will be your bastions of probability. So that is the close trades here. Let's look at some of the open trades that I'm in right now. And pull this up here. I'm going to start with Bull. So Bull has been quite bearish for pretty much the past month or so, after rejecting off this IPO VWAP all the way from the September 30th. So I am long on Bull the January 26th $10 calls, and so those are actually currently out of the money right now. So I've been selling I've been selling calls against this position. So currently, even though I'm down on that position about $500, I've recuperated about $270 of premium against that. So that basis is quite reduced. And if the stock starts to find support, I'm actually okay adding to that position, um, because it'll be so much cheaper, and I can double the premium that I can sell per week, and I have a good chance of making that money back on a bounce. So we'll see how it does. But right now, the stock is very bearish, so I don't have any justification to add. I need to see some sort of bullish price action that I can add on this position before I consider um, going yeah, before I really consider doing that strategy. It also does have earnings coming up, looks like on the 20th. So probably going to wait for that before I make any sort of ads on this guy. That could be a catalyst on the upside, on the downside, or it could just literally mean nothing. Hard to say. Um, but yeah, I mean, Bull has been just a weak guy. Schwab weekly at the money, that has been an excellent trade. So currently we're short the December 19th 92.50 puts, and we had taken profits on 2 weeks worth of short premium. So let me pull up the Schwab. Where's the Schwab one here? Okay, so last week we had sold the 95 puts, and we closed that we think we sold them at $1.28. We closed that for 75 cents. So took a 53-cent gain on that, and then we sold the 11/7/95 puts for $1.52 credit. We took profits on that trade here on this little pop up at 12:30. So we bought the those puts. I sold them for $1.53. Bought them back, or 52. Bought them back for 75 cents. So took a 77 cent credit per contract, and then I sold the November 14th 95 puts for $1.87 credit. Um, yeah, which is currently in the money. So yeah, stock is rallying, and so right now our total profit is $1.30 of credit. So we'll see how we do this week, and if we have a nice amount of profit, we might close down the entire trade and buy back the short puts. We'll see how much those are trading for. Those could be at a small win or a small loss. But right now, this is looking pretty good, and ideally we want this to stay above 95 so we can collect that full profit on that, not have it move too much. But even if it moves lower, like that time premium decay just erodes so much of it before assignment. So the only thing you really have to worry about is if you get assigned, what you do. And typically you get enough premium where if I'm selling the 95 puts for like $1.50 premium and the stock is at like $94, right? And I get assigned at 95, I'm already up $1.50 in premium, right? So my break even is 93.50. So as long as the stock is above 93.50, I can just sell those calls, and um, I can get profit for that week, and then I can decide if I want to reestablish the spread. But you make the decision on the spread based on if the stock is bullish or bearish. Right now it's pretty neutral, but if it started to break down here, right, you could close out those 95 puts on the short puts and just see how the long puts are doing, and be willing to ride those down. So that's Schwab. I'm also in IBB. It's a longer term swing. So this has reacted really well to the market. So we're long IBB here. Let me try to find this guy. All right. So we are long IBB, and we are long the November 21st. I believe the 155 puts. I could be wrong here. I'm just going to double check my journal. Yes, the November 21st, 155 puts. Got them originally for 630 on the 31st. Stock had pulled back and actually formed a nice little hammer here on the 3rd. So I added to those puts at 510. So now I have a double position on that, which I guess now in terms of my current sizing is a normal size position at about 565. So I like what I see here. If the market does rally, I'm expecting IBB to rally, and I should be able to take a nice win on that trade. But you can see how it's been holding this 8 and 15 the entire time over here. So IBB is a really nice one that we're in. Next one over here that we are in is Apple. So Apple took that as a long on the 6th. It was looking pretty nice here as it got back above the AVWAP E, rejected off this midpoint, and now it's just kind of compressing, not really doing too much, but wasn't very bearish today. It was kind of weird because it was strong earlier in the day, and then as the market rallied, it was quite weak. Did not rally with the market, which that just means that look, this was a non-tech rally, right? This was not the mags that were rallying here. RSP, IWM much stronger versus QQQ, but still holding the 8 and 15. So if it breaks down below the 15, then we're out of the trade. If it can break back up, then we're good. This is the 265 November 21st calls for $9.50. I'm still long Goldman Sachs here. This was a day trade that I had taken here. Taking a day trade at 10:30 at 8:05. Pull back and then had a nice pop over here, which I added to the trade before. Eventually, that got smacked down as well. And stock has just been kind of chopping around here, pretty choppy. I'm going to try to get out of this trade sometime. I'm hoping for a market rally here, but you can see that there's just a whole bunch of shit happening on the Goldman Sachs chart, just a whole bunch of lines and wicks and chops. So got to be patient. I was ready to exit this trade here in the morning or in the middle of the day here as it broke through the 100 SMA, but I was waiting to see how it would close. We had a nice strong rally. We got back above the 100 SMA and we closed right above the 15 and right at the 8 EMA. So this was a nice big probe and test. I think this might be one of those nice probes that could push us higher on Goldman Sachs. But yeah, I'm looking to get out of this trade sometime this week if I see some follow through in the market. That'll be that. So that's the one I'm in. And then let's talk about EOSE. So took a starter position in this stock. This is a beautiful trade. Fantastic D1 setup. Look at this price action intraday, right? Just absolutely beautiful price action. Took the December, where is this? December 19th, 1450 calls, or sorry, 14 calls for $5. I got filled on this pullback over here. So up about 30 cents. Has about $1 of premium on this guy. Pretty high in the money. And I'm willing to add to this position if it pushes up over here. There is some, maybe some resistance around here. You can see there's probably some high volume candle at 18 over here, maybe $19. Might be some OI at about $20, but I'm looking at $20 here. If it can clear $20, it has room, in my opinion, to like $25 or even like $31, which is the all-time high. But this is just a beautiful D1 setup, right? Strong move higher, weak choppy move, breaking through the low minus trend line, through the AVWAPs, and through the above the 8 and 15 EMAs, and above these any AVWAPs that are coming into play on heavy volume and on really strong price action. So this is a fantastic setup. I took a starter because it's so good. And if the market doesn't cooperate, I'll be ready to get out of the trade if I need to. But I can lean on this support over here in terms of all of the support coming into play, just around the $14 level, and even the $15 level, I should say. That's a high OI level for this stock. Last one that I'm in is SMR. So this is a time spread that we had quote unquote legged out, but not actually. So SMR, I'd taken the 34 calls and they're pretty expensive. They were like 80 cents. And typically for a time spread, you want around 1%. But the calls were so high, or they were priced so high because the premium was really high. But we got a really nice IV crush on this. It was like, I think about 50% was the IV crush on SMR. Option liquidity is 4 and exceeds earnings only 14% of the time. So this is a really nice setup for an earnings time spread. It did gap. It was kind of flat, but then it sort of gapped down overnight and then pushed down lower before having a nice resurgence higher. So when you get an adverse move against you in the calls, you can let the short calls expire worthless, and then you can just monitor the long calls, right? So if they don't move up, then you just take the full loss in the position. But if they do move up really nicely, right? You can actually get some profits and probably and potentially get a really nice win on that. Now, what's standing in the way of SMR is this pesky 200-day SMA. It's got to clear that, and it has this gap fill over here. If it can do that, it has a nice chance to, I think, snap back. I think at least to, like, if you look at the chart over here, um, 3250, right? If you can get back to 3250, that would be a pretty nice win in those calls. They're fighting time premium decay though, so it's got to make a pretty big move very, very quickly. And if it doesn't do that, then the spreads are worthless. So just gonna watch that on Monday here, see if we get some recovery, see if we get some market cooperation, and that'll be that. So those are all the trades that I am in right now, and I'm just tossing a couple trades that I'm watching over here. So couple, I call that CN and MU already. I think they still look good. You could have still justified staying in those trades versus me getting out of them. They pull back to the 8 EMA, and I think like I would bid at the 8 EMA on these stocks. You can see how much they test them really nicely. So I'd bid at the 8 EMA here, see if you can get a nice fill on these guys. But to me, it feels a little bit too early to load up on the market swings yet, considering the heavy selling pressure. I want to see a little bit more market confirmation before I take some starter positions. A couple of other ones here. You have M, which is holding up pretty well. Didn't rally too much today, but it's been a nice move on the D1 chart. Crowd is another really nice one here. Really nice bounce off the M5 8 EMA. Some of the tech stocks that were looking good on Thursday, not looking as good today. IBM's looking okay. Looking a lot better on Thursday versus on Friday. SanDisk just reported earnings. This is a really nice stock. Hard to get in on options. So shares is probably your better bet. The options are just really wide bid-ask spreads, but shares is really nice on this guy. And again, you get a nice bid on the 8 EMA here. So I'd probably you could take a starter here if you want. This stock is choppy. You kind of see it pokes up over here. In this case, we got some follow through. It pokes up, it'll pull back. It'll usually at least test this level if it gets a follow through. So you can sometimes add back at the same price. Already mentioned EOS. GLW was looking decent, but then not looking as good today. It's looking okay. You can see here the stock is kind of stalling, but there's a pretty strong support level around $83, $83.50. But kind of been chopping around here. I think it's just digesting the gains after a really, really impressive run. I mean, this stock has just been on an absolute tear for the past 6 months. So this sort of pause is pretty normal, pretty natural. Some people are looking at Nvidia, which is nice. It's fine. It's to me, it's not that much stronger. It's a little bit stronger than the market. It has a little bit more of a trend, but I mean, this is pretty choppy stuff. So I have some, some investments in Nvidia just in terms of very long term shares. So I figured this is a good place for me to add that, but that's just a long term, scaling into a really good stock over many, many, many years. It's not really a trading strategy. So this is, I think, an investor sort of buy the dip thing versus I'd want to see some more technical confirmation, like something like here, right, where we get this nice pullback, we compress for a little bit, then we pop back up, we get this little J handle here. This was a great entry that I added back over here on the 21st when I had Nvidia, but shedded all of those gains. So I don't know what's going on with that Michael Burry stuff, but you know, let's see what happens here. But in any case, Nvidia is pretty choppy, but still bullish, here. So that's it. Thank you very much for watching, everyone. Hope these are helpful, and I will see you all in the next video.